This is not financial advice. I'm recording my thoughts about Microsoft stock. In this video, I'm going to give my opinion on whether it's too late to buy Microsoft stock after it shot up to about $305. First, I'm going to give a brief background of my journey with Microsoft stock. Then I'm going to talk about their recent earnings. And then finally, I'm going to give a valuation and then give my opinion of whether it's too late to buy or whether it is good time to buy stock at $303. I do own Microsoft stock. My cost basis is about $205 in one of the accounts, and in another account it's about $210. I've been waiting for the stock to fall to about $220 so I can add it to my position, but that did not happen in the past 12 months, so I did not touch this stock. I was counting on negative growth in their personal computing and gaming sector, and I was also counting on the cloud slowdown. So I initially thought that their revenue growth is going to stall this year, and that's going to cause the stock to drop, and then I thought I could take a position at about $220. Since the stock shot up to about $303 with the ChatGPT hype and also strong recent quarter earnings, I have to reevaluate my strategy of how to get into this stock and what price. And that's what I'm going to do in this video. Let's now look at the recent quarter earnings, that is Q3 of financial year 2023. As you can see on my screen, focus on the left. Broadly, Microsoft has three different revenue segments. The first one is Microsoft 365, that's the Office 365 and LinkedIn. The second one is Intelligent Cloud, that's where the Azure comes in. And the last one is more personal computing, which includes their PC and gaming sector. And I was thinking this is going to decelerate significantly and the stock is going to fall, and that did not happen. So let's now focus on the first segment, which is Office 365 and LinkedIn. That grew by 11% year over year, and they made about $17.5 billion. And notice that it's 49% operating margin, very high operating margin business. Then move on to the Intelligent Cloud. It has 43% operating margin, and it grew 16% year on year. And the last one is the more personal computing. It actually fell by 9%. So a number in brackets is actually negative. So the revenue dropped by 9%. So overall, if you move on to the far right, the net profit is about 18 billion. For a revenue of 52 billion, the net profit is 18 billion. That is extremely impressive. 35% net profit margin is extremely hard to achieve. There are multiple reasons why they could achieve 35% net profit margin consistently, because they have huge advantage with respect to the operating expenses. I'm not going into details of that in this video. I will probably make another video for that. Let's now look at another screenshot which provides valuable insights into the earnings. I want you to focus on the red circle, which shows that the revenue decreased by 9% in the personal computing and gaming sector, and in constant currency basis, it's down by 7%. And now look at the blue line where I highlight that Azure out of the Intelligent Cloud actually grew by 27% year on year. That's almost on par with AWS. And on a constant currency basis, this is up 31%. That is extremely impressive. And needless to say, Azure growth is actually contributing to their accelerated revenue growth as they get big and big. Let me show what I mean. Look at the screenshot on my screen. In 2018, the revenue growth was 14%, and in 2022, it's about 17.96%. This is actually strange, right? Because as the company gets bigger and bigger, it's hard to grow for the company. This is not a small company. It makes $200 billion of revenue each year. The main reason for this is their Intelligent Cloud sector is growing at a very fast pace, and it is offsetting the decelerated growth in the personal computing and gaming sector. And this is extremely impressive that they are increasing their revenue growth year on year despite being a very large company. But we have to also see how they're going to continue this revenue growth. Is it going to get to 20% next year, or it's going to stall or reduce to about 15%? So that is dependent on their execution, but we will see that in the evaluation. But let's now look at their balance sheet. They have about $104 billion of cash and cash equivalents, and the current and long-term debt totals to about $60 billion. So the balance sheet is in a really good condition. And now let's look into the number of outstanding shares. In 2019, they had 7.7 billion, and in 2022, they had 7.5 billion. If you do the math, that's not very significant. It's less than 1% buyback each year. And if you look into companies like Apple or Google, they buy back significant amount of shares, like 2 to 3% year on year. And Microsoft is not known for the buybacks. Microsoft uses their net income to acquire new companies. For example, recently they wanted to acquire Activision Blizzard, but I don't think that deal is going to go through. But if that deal doesn't go through, they may do a bigger buyback or look for another company to acquire. But the point here is Microsoft is not very known for buybacks. Now let's move on to the valuation for 2027. And this is where I provide price targets in two different cases. One is a base case based on which I will invest. And there is a bull case or a great execution case, which tells us how much the upside if they do really good. So let's now start with the base case. In 2022, they made about $198 billion of revenue. And if you look into the past few years' growth rates, they're in the range of 14 to about 18%. But I'm going to make a reasonable assumption, which is 15%. It is also hard to do, but I think it is a reasonable assumption. Based on my understanding of the business model, I don't think they can get to 18% plus in the coming years unless they get another new revenue segment. For example, search, right? So they are saying that they can steal some market share from Google, which we do not know yet. But if they can manage to do that, which is highly unlikely, they can probably get to 18% plus. But I'm not counting on that in the base case. So with 15% revenue growth rate, they can make about $400 billion of revenue in 2027. And we know Microsoft consistently control their operating expenses and make 35% net profit margin. So I'm going to keep the same 35% net profit margin, because 35% net profit margin, they can make about $140 billion of net income in 2027. For a company that's growing in the 15% range and has a net profit margin of 35%, I can assign a multiple of 20 or 22.5. But since Microsoft has incredible moat, I have to pay a premium. So I'm going to assume a multiple of 27.5, with which this company would be worth about $3.8 trillion. The number of shares currently are in the order of 7.5 billion. But as Microsoft continues to get more and more net income, they have to reinvest that money, or they have to buy back number of shares, right? So I'm assuming 2% buyback. Don't think that 2% buyback is less, because Microsoft is a $2.3 trillion market cap. So a 2% buyback would need almost $46 billion of net income. So a 2% buyback would make the number of outstanding shares as 6.779 billion. And with that, the 2027 stock price would be about $565. This is with reasonable assumptions. And the current stock price is $303, right? So that's about 87% gain in 5 years. And also remember that they pay close to 1% dividend each year, so that's another 5%. So in a way, we'll get more than 90% gain based on reasonable assumptions with Microsoft. So my desired price would be about $283, but in the short term, I feel the stock can fall below $250. That's when I will think about adding to my position. Now let me talk about another case with great execution, and this is where I put 20% revenue growth rate, because even though this is highly unlikely, it's not impossible. They can definitely add another revenue segment or accelerate their existing revenue segments to get to 20% year on year revenue growth rate, which is they can make about $490 billion of revenue in 2027. I'm going to keep the net profit margin same, 35%, with which they can make about $172 billion of net income in 2027. For a company that's growing in the 20% range and 35% net profit margin, I can give a premium multiple of 30, with which this company would be worth about $5 trillion in 2027. With respect to the number of outstanding shares, we do know they currently have 7.5 billion, but since they generate incredible amount of cash, if they can't find more companies to acquire, they have to buy back even more shares. So I'm assuming 3.5% buyback. 3.5% needs more than $80 billion based on their current market cap. And we do know they're going to grow bigger and bigger, right? So 3.5% buyback is actually optimistic. So they will end up with 6.27 billion outstanding shares in 2027. And based on that, the stock price would be about $824. And current stock price is $303, right? So that's about 172% gain plus 5% plus dividend that they give in the 5 years. So that's almost triple the money, right? So if you believe in a 20% growth rate in the next few years, it is a buy at $303. But I'm not counting on this. I'm counting on the 15% revenue growth rate and a 27.5 multiple for my personal journey, which is why I want the stock to drop below $250 in the short term for me to start adding. So this is my opinion about Microsoft. To answer the question, whether it's too late to buy the stock or not, it really depends. Based on my own opinion, I think it's too late. Yeah, I want it to fall below $250. But if you believe in the great execution case, it's a buy at the current $303. And remember that this is not financial advice. And please let me know your thoughts in the comments. I would love to know your input on the assumptions that I made in these two valuations. Thank you so much for watching.